So far, we've been having one interesting beginning to the year for cryptocurrency. The money is obviously and clearly not flowing into crypto. However, the money is flowing somewhere. So on today's video, we're gonna trace where the money is going, how we should be positioning ourselves in cryptocurrency, and I got some things I want to be sharing with y'all over this course of the year, starting with today's video called Crypto Recap Number 1. So as we begin today's recap video coming at you every Friday, I want to get back to the basics of where I started this channel at. That was going in on information that I think you should benefit from, and I think that I could benefit from. Discovering what's actually out here, analyzing it, and then putting it into a digestible format. We got a lot of new people coming into crypto, but they're coming in at a time where the money is scarce. Startups are closing down, cryptos are crashing, and everyone wants to know where is the bag. So as we begin today's video, make sure you check out this clip from Tom Lee, and we're gonna break it all down.
If you're saying that the move up in silver and gold is kind of drawing a lot of that money or interest away from digital gold and digital silver, so to speak, does that then mean that the investor bases that they share is growing? And so they make that distinction from an allocation perspective.
Yeah, and I think part of it is mechanical. Like, you know, when gold and silver rise, and let's say folks are using margin or options, then they're using capacity that could be used to buy other risk assets, whether it's Mag 7 or cryptocurrencies. But because crypto inherently has delevered, then that's going to be felt more in the crypto space. So I think crypto, which should be going up on like weaker dollar, easing Fed, it doesn't have the leverage sort of tailwind because the industry delevered. And as long as gold and silver are rising, then there's a FOMO into buying that instead of crypto.
Essentially, Tom Lee and those other hosts of the show were talking about that gold and silver is essentially sucking in all of the money. The money is not flowing into other risky assets like Bitcoin or things of that nature, altcoins. It is going to stability. A while back, I talked to y'all about the debasement trade. This is where the Fed is printing money. The government of the United States is diluting the US dollar. And the dollar, even at the time of this video, is crashing. It's at the lowest it has been in price-wise relative to the yen, the pound, the euro, the lowest it has been in a while. Now, people are fleeing US treasuries, they're fleeing the dollar, and they have parked their money into precious metals. Palladium went crazy, copper is going crazy, platinum going crazy, silver parabolic, and obviously gold. Bitcoin, which is the digital gold as they talked about, it is not popping this last year the same way silver and gold is. So that's the whole point. That's the whole thing right there. The money ain't in crypto right now. So we're going to discover what we can do and put this all in the proper perspective. Now, I got a site to show y'all called companiesmarketcap.com, and this one is focused on the world's leading assets. Now let's look at it. Number one is gold. And I remember looking at this one last year. The market cap was 22 trillion. Now it is 36 trillion, adding 14 trillion in a relatively short time. Silver was sitting in the top 10, okay? Now silver being up over 200 something percent in the last year is at number 2, even passing up Nvidia, Alphabet, Apple, Microsoft, Amazon, and Bitcoin itself. So silver is at $6.39 trillion, up another 7% today at the time of this video. That's crazy. Over $100 silver, and it was just $25 a few months ago. Now, Bitcoin is at 1.784 trillion, still doing very well, but it is not up here with the big dogs. That is something to really pay attention to. The money has obviously flown into gold and silver, precious metals. Will it keep flowing? I'm thinking yes. The dollar is crashing. Silver, Bitcoin is rising. And if we go look at this chart here, this is the Bitcoin versus gold price chart since 1792. I'm focused in on the last year. This is where in April, okay, during the tariff time, Bitcoin and gold was relatively trading around the same, and something has happened. Gold takes off, up 82% in the last year. Bitcoin down 15% in the last year. So they just split apart, y'all. They split apart. And we have to wonder, how long is this going to happen? The halving already busted off. Bitcoin already made new highs. Gold is at 5,000. Will it make it to 10,000? That's a question on everyone's mind. Now, I got this chart, this platform called FinViz, Financial Visualizations. This is a chart I like to use information I like to use when I'm trading and just trying to do more research to find where the money is going so I can go where the money is going. So if we go look at the year to date performance right here at the very bottom, let me zoom in for y'all. The very bottom, okay? The money has flowed into basic materials up over 18%. Just year to date, energy up almost 11%, and then you got industrials up. So those top three: basic materials, energy, and industrials. And I talked to y'all about this before, but basic materials is the gold, it's the silver, it's the platinum, palladium, and all the miners and other companies associated with it. They're all rising. All the money is flowing to them. And then you got energy. In the United States, President Trump took over Venezuela, took the President Maduro. Now he seized the oil tankers are seizing. They're taking that. Energy is thriving right now. Data centers is a big reason. A lot of companies, uranium, all these different companies have been in people's focus. So they're putting money there. Then we have industrials. Industrials are building data centers. That's key. NVIDIA is building them, Apple, Google, Meta, they're all Amazon, Google. They're all about data centers right now, and industrials is the ones fueling it. You got companies like Fix, Comfort Systems. They do HVAC and all of that for these type of companies. So these random companies you never heard of are producing a lot of profits, and there's much more, okay? Even defense is doing really well. So these are things we got to focus on. Then if we go up to the 3-month performance, so let's start with the half year. 6 months ago, basic materials was number one. Again, gold and silver. Then you go to 3 months, basic materials and energy. You go to 1 month, basic materials and energy. And then if you even go to the 1 week performance, basic materials and energy. Okay. And I know these don't show crypto, but global money has to go somewhere, especially money in the United States. Now, if we go look at Bitcoin, the community sentiment off of 6 million votes is still amazing at 81% bullish versus bearish. But if we go look over to the left, again, at the time of this video, Bitcoin is up $89,000. Bitcoin is down 12% in 1 year. And I told you, gold is up 86%. Silver is up over 270%. So the money has left here. Not all of it, obviously. You got Michael Saylor and all of them. They're buying. But the money has left for the time being. Ethereum, which is performing relatively the best at $3,000. Ethereum is down almost 5%. This is the crypto sentiment. 82% for the community sentiment. That's very positive. So Ethereum is looking the best, and there's a reason for this. Then we got XRP. As you go away from the giants, Bitcoin and Ethereum, XRP is a fan favorite. Okay. down 37% year to date. Even though it had a great performance over the last 2 years, it is down 37%. Then we have Solana down 45%. And people also love Dogecoin. It went crazy during COVID, down 62% in 1 year. And as I showed y'all before, gold and silver, number 1 and number 2, the money is there. They're rising like crazy. People are not willing to risk right now in crypto. This cycle has taught me a lot, and we need to all pay attention to it. So there's other big things happening right now. Remember, Congress, Donald Trump promised to make crypto better legally, and he did the first part very well. The Genius Act for crypto stablecoins, the Genius Act. That's where stablecoins have to be backed 1-to-1 with cash or US treasuries. Companies can now produce them. You got the USDC, you got the Tethers, you got the PayPal USD, you got all kind of things happening there. The next one was the Clarity Act, the Digital Asset Market Clarity Act of 2025. And this act essentially is supposed to make things even better, right? This bill establishes a regulatory framework for digital commodities defined by the bill as digital assets that rely upon a blockchain for their value. And it's supposed to be regulated by the Commodity Future Trading Commission and must generally regulate digital commodity transactions, including digital commodity exchanges, brokers, and dealers. That's the gist of it. Crypto needs this to pass so it can continue to go mainstream. We've seen the ETFs. We see the DATS, digital asset treasury companies. I played a clip from Tom Lee. They buy Ethereum. You got companies buying Solana. You got obviously the companies buying Bitcoin. We need that to pass. But this has happened recently. And this is what Brian Armstrong, the leader of Coinbase, was saying. Coinbase CEO says big banks now view crypto as an existential threat to their business. Brian Armstrong returns from World Economic Forum with message: traditional finance is taking crypto seriously. So here's the issue. When you put your money inside the bank, we have something called fractional reserve banking. And in 2020, during COVID, 2021, they lowered that to basically zero. So a bank can take your $1,000 that you put in the bank for them to hold, and then you earn your 0.025, right? Like not even a whole percent on money. They take your money and they loan it out to 10 other people. So they turn your $1,000 into $10,000 worth of loans. Now those loans are earning them 5%, 10%, 20%, 10 times. Then they take all those profits and they only give you a penny, a small little piece. What they're doing in crypto right now, especially because of the Genius Act, companies like Coinbase, you're putting your money onto their platform. They're lending it out just like a bank as well. And they're giving you 5%. That's like a high yield savings account. 5% is much better than 0.05%. Not even a 1%, to make it easy. Not even a quarter of a percent. You're getting 5 with Coinbase. And that's the issue. Banks are scared you're going to start putting your money onto the blockchain rather than with them. Then companies like Coinbase and Robinhood, who pays out about like 3.5%, they're going to collect all the money and become the new bank. You're going to go to DeFi and use decentralized finance and earn 12%, 10%, 8%, 7%, 5%, rather than giving your money to banks. You're going to borrow from your collateral rather than borrowing from them. You're going to use a Coinbase credit card or a prepaid card and earn Bitcoin as a cashback reward rather than the flight miles. Get what I'm getting? You get what I'm saying, rather? You understand? So that's what he's talking about. He's saying this is the threat that is happening. Banks do not like it. Now let's look at altcoins. I got this chart pulled up. This is the crypto total market cap excluding Bitcoin and Ethereum. And I want to point out something. This is the peak from October 7th. Remember, Trump tweeted on the 10th. That's why you got that long wick. Everything dumped. If we go here, in 115 days, crypto excluding Bitcoin and Ethereum is down 29%. A 5% pullback is a correction. A 10% pullback is a deeper correction. But once you get past 20%, you are in a bear market. We just about at 30 from the peak. 1.2 trillion all the way down to 843 billion out, excluding Bitcoin, excluding Ethereum. We are in a bear market on this daily chart, y'all. If we go look at the weekly, we still got room to go to be on the bear market on the weekly chart. We don't want to go down there. We don't want to go down there. A lot of cryptos, as I showed you with Dogecoin, Solana, XRP, already down 30 to 60%. Some of y'all know about cryptos that are down 90%. We don't want that. So I'm showing you this is because this is where the current situation is at. Now, let's get to the opportunities. Opportunity number one, if there's some great cryptos like Bitcoin, like Ethereum, like XRP, Solana that you want a dollar cost average into, this will be the time to do it. We may have 1, 2, 3 years of this, but this is the time to start now with dollar cost averaging. The next opportunity I like is decentralized finance. So this is Aerodrome. I have talked to y'all about this platform before, but I like Pact in the Algorand ecosystem. I like Tinyman in the Algorand ecosystem. I like Radium and the Solana ecosystem. I like Saucer Swap and the Hedera ecosystem. It's all similar. It's all the same. This is a liquidity pool. You can put a USDC, which is my favorite stablecoin, paired with a token. Let's call it Aerodrome for this example. Or you can see down there, we can call it Ethereum, okay? Or if you're on Saucer Swap, USDC and HBAR, whatever. It's all the same information. If you put money into a liquidity pool, you can earn fees, you can earn emissions, you can earn a yield. And right now, Aerodrome for the USDC here, this pool here, USDC Aero is earning 19%. So Aero's also down a good pretty penny as well. But if you're stacking until we get back to a next run, so you're got the USDC paired with Aero, so you lower your volatility and drawdown. You got that in there. You just dollar cost averaging into a liquidity pool and you're earning 20% on that, and you collect all the Aero that you earn and just hold it. And over time, once Aeros start to go back to $2, back to go to $3, all that Aerodrome or whatever coin that you collected is going to be valuable. And that's the opportunity that I see for us in crypto is dollar cost averaging into a spot position or dollar cost averaging into a liquidity pool. So the money is flowing into, I showed y'all gold, silver, platinum, palladium, copper, precious metals. It is also flowing into industrials and energy, oil companies, gasoline companies, uranium companies. But once that slowly starts to cool down, the dollar continues to be weaker, we can see the money flowing back into crypto. Let me know what y'all think about today's crypto recap number 1. Did you learn anything? There's something that I missed. What's the opportunity that you see? Make sure you hit that like button. Make sure you subscribe. And I'm C Will with the Passive Income Network. And I'll see you in the next video, y'all. Peace.
Passive income. Gold in my dental. Thank God for my mental. Investor fundamentals. Told my girl it was simple.